Hello and welcome to another update video about Ethereum. So Ethereum, obviously slightly different chart than Bitcoin in general, because the special situation with ETH is that the move of the June low, even though it was not an impulse, it was just a diagonal at best, it did lead to quite a strong increase, probably fueled to a degree by the Ethereum merge. And now we came down, throughout August, September, October, November, and Ethereum maintained a higher low. Something I mentioned to you all the time, that just because Bitcoin makes a new low, Ethereum doesn't need to make a new low. A lot of people said, how can you say that? Because, they all move together. But here's a beautiful example how markets can move to a degree in correlation, but still move in their individual waves. So for example, we can, in contrast to Bitcoin, we could count this move as a wave 1 to the upside and a wave 2 to the downside, even though it's a little bit of a weird pattern with what happened here around the 9th of November thanks to FTX. But still, you can count the move down as a wave 2. Would actually sit down here probably, but don't worry about that. But we could count this as a 1-2 setup. And I mean, it could already be, the low could be in. The low could be in, certainly. We talked about that. For Ethereum, the chance is higher than for Bitcoin, certainly, because Ethereum hasn't made a new low in November. So we have a potential 1-2 setup here already, and we might be rallying in a third wave. The only thing is that this move around the 9th of November made it really, really difficult. And also this structure doesn't really look great. But, the potential for the bear market low is already in, is higher for ETH than for BTC, in whatever shape or form, right? So the possibility exists certainly, but it exists also for Bitcoin. Can we really confirm it? Also here, same answer like for Bitcoin. No, we can't really confirm it. No, a lot of people are calling out already the bear market low is already in. And yes, it could be. We've talked about it many, many times. Talked in this area about building a solid core position that was here in October. We talked here in this little white support box about an upcoming move to the upside. So everybody had hopefully enough chance to build a solid core position or dollar cost average in this region. So you should be prepared for any outcome really. Yeah, because even if we go down lower, eventually you could either set a stop loss if you want to, or you don't care and just DCA at a lower price to increase the size of your core position. So everybody should be prepared. We have, however, the situation that as easy as with Bitcoin as well, this could very simply be an A wave or a wave W to the downside here in an X wave and a Y wave to the upside, or an ABC. Doesn't really make so much of a difference at the moment. Y waves, however, can extend out quite a bit, because if it's a Y wave, you have an ABC in between, which possibly includes two impulses. Yeah, so be aware, this could easily just be a WXY pattern. So that means just by getting 5 waves up here, 1, 2, 3, 4, 5, does not in itself confirm that the bear market low is in. It's like with Bitcoin, where we need to see support in the wave 2. So if this is 5 waves up, it could be a C wave, which would sell off again, make a new low, or it's a wave 1, which would be bullish, but then we won't know that until we see if wave 2 holds support. And this wave 2, which will ideally come a bit lower, but doesn't need to, right? That's the risk. That's why, it's so important to be prepared, because you can get a very long wave 1 or a very long C wave. And if it's actually a wave 1 and bullish, the wave 2 can be very shallow. So you want to make sure that you have some involvement, I guess. No financial advice, yeah. But if this is a wave 1, it should hold wave 2 support, and that would be another great entry point for anybody who would like to wait for confirmation, because we might then, if this is really the bull run beginning, or the beginning of a more extensive bear market rally, you could, you're trading the wave 3, right? And that could take us to 3,000 and beyond, and we may not see these prices again in this situation. So again, anybody who wants to wait for confirmation could wait for that pattern. Before that, I will not be able to confirm that the Ethereum bear market low was in. However, again, I mentioned before, it doesn't mean you have to wait until here to trade or to enter a position. Absolutely not. That's an individual decision. That's up to you. A lot of people try to get lower prices in the last few months, which is fine, which I did as well. Also with regards to dollar cost averaging, because we're in a bear market. So dollar cost averaging is generally lower risk here than if you do it like when Ethereum has already reached 5K, 6K, maybe 7K. Yeah, I will certainly not DCA anymore in an all-time high scenario. That's when I want to start to cash out at some point. Okay, that's sort of the situation. And let's go into the detail, because here we are still working. I mean, if we consider, you know, we need to see at least 5 waves anyway. We haven't even done 3. So be aware of that. Yeah, we're still very, very early. And this could still go on for a bit. Yeah, it's quite an extensive rally, but that would also be expected in some kind of a bearish scenario. Okay, so we are still in this orange support area. You can see again how relevant it is. We're still in this channel. BTC, I think, already tried to break out, yes, and BTC already broke above this trend line, knowing that we haven't closed the 1 hour candle yet, so it might very well not be the case. Here, Ethereum is still in the box. This is a support area that's relevant for this wave 4, and it's also within this descending channel still. So you can't really say the correction here is over until we break out of this corrective price channel, right? That would be needed. If we talk about how this could be structured, I mean, there are again different possibilities. Just thought about that again and could say, right, maybe we had here an A wave. This was all the A wave, yeah, all of this. And we have got then a B wave to the upside, that's unchanged. And oh no, 1 sec, I think it can't be an ABC, then it would need to be a WXY. I'll tell you why. Here, WX and then the Y wave would possibly still come down lower. Here, no guarantee, yeah, it all depends on which levels are breaking, but this is sort of just to highlight to you how this can be labeled, yeah, what scenarios there are. So again, there's different ways of how this channel can be drawn, I guess. Probably rather like this, when you want to use just the candles, not the wicks, and down here you can do the same thing. Just move it to a parallel channel. So again, that's why trend lines are always a bit tricky. But yeah, we could still see a continuation of that correction here in a Y wave, and the Y wave would again be an ABC. So we could say, all right, we had here an impulse down, an A wave, now the B wave, and that could even become a triangle, and then one more C wave down. So that's a possibility, just because we haven't broken out yet. But if we have broken out, now you have to assume that correction is already over. The problem here that we had yesterday was that this move up looked very corrective. So it was very difficult to count it as an impulse, and the move down anyway messed it all up, because the move down looked impulsive. So yeah, so we need to be open to the idea that we continue for a bit in this corrective price channel. However, a break out of the channel resistance would actually confirm then the main scenario that somewhere in this box, the correction should be finished. Yeah, you just can't say, okay, it's finished now and we will go up. That would be crystal balling, which we're not doing, which nobody can. But yeah, it could certainly be some kind of a triangle in the B wave, maybe. Yeah. You could possibly also argue that the entire wave 4 is a triangle. That's possible. So again, I mentioned it before. There are dozens of different corrective wave patterns, and when you are within a correction, it's very hard to definitely confirm one particular corrective pattern which is ongoing. I mean, this is valid, WX, Y, A and B, and now possibly the C wave down. If we get the C wave down, obviously we need to hold now the B wave high at 1642. But the B wave could also still extend a bit higher as long as it stays below the X wave, which makes it so difficult now to say, you know, what scenario are we in. Wouldn't be surprised to see the B wave retest the channel at the top. That's possible, yeah. And then the B wave could still become a triangle, up and down, until we come down in the C wave. Again, all the wave 4 is the triangle, yeah. And that is why it's so important not to care too much about micro counting. Just look at the pivot points, the decision points. There was some time to enter here. There might still be time to enter if you want to trade this long, if you trade the support. But obviously now we're back at the top of the box, so the position size should be smaller if you look at the stop below the box. And if we drop below this support box, we are looking at getting into this green region again. That would be the fallback scenario between 1500 and 1370, where we will then drop back into the higher level scenario. But at the moment, expectation would be here to put that fifth wave in, as long as we're holding the 1590 level. This still looks very corrective. I mean, it doesn't look impulsive down at the moment. It looks rather corrective sideways consolidation, which would rather, confirm another move up is coming. We'll see. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.